And we're back. Tuesday morning,
March 11th.
March 11th. Thanks, dude.
You're welcome.
Post crash, you've told me
Yeah.
that it's over with.
Man, it was tough, but we made it through.
Has bounced back a whopping 50 points.
Yeah, no, I think we hit 100 early this morning.
Nice.
We're
Okay.
good. Yeah.
Spoos are back to 56.50 or something.
Yeah, that was tough yesterday. Not a lot of people in the office happy. A couple that were extra happy.
I was gonna say they're
True colors, real friends. How many of us?
It is the person at the craps table that like everybody's like on fire for weeks, months, even years at certain points being long, but there's always like one or two guys that's betting against the table.
And they win every once in a while.
And the last week or so has been a huge win for those guys.
That's all right. But yeah, bottom's in. How we feeling Tuesday? You do this Monday, Tuesday.
Definitely doesn't feel like the bottom is in for this market. I mean, I will say I've done a ton of research around equity crashes historically. A lot of them do tend to fall on Mondays. And a lot of them will historically have seen a bounce following that Monday crash. Now, you could say, well, that's all well and good, Frank, but I'm pretty sure we did exactly this thing last week and maybe even the week before. And so in environments like this, you also have to take into account the fact that volatility tends to cluster. You don't see a lot of instances, even going back to the pandemic, you might look at that on your chart and be like, oh, well, it's a blip. Like it was really just like one day. It was not one day. It was a couple of weeks, and really not for 2 solid months that we saw the recovery. We don't normally see kind of an exact V like that where it's like you sell off 30% and immediately regain that within, I think it was like we sold off going into March and then the start of March, obviously, that year. And then we were back by, I think, like June or July.
Yeah.
Volatility does tend to cluster. You tend to see a lot of big moves around each other, for better or worse. We're seeing a lot of them to the downside. But another thing that I think you are encountering maybe for the first time in your career is correlations go to 1 when volatility spikes. And what I mean by that is everything that's risk on is going to get hammered, and everything that's risk off is likely going to see a bid. Because, you yesterday were surfing through the platform and you were like, everything's red. Like, these stocks are red, and like that stock is red. And I was like, yeah, Glenn, we're in the middle of a crash right now. Everything is highly correlated at this point.
Hard to find some green, on my watch list yesterday. But it's out there somewhere, right?
On days like yesterday, I don't know if it is out there. I think it's just a matter of degrees. But some huge moves across. I mean,
at least risk off crypto is still good, right?
Which ones are those?
The safe havens of crypto.
The safe havens of crypto. Which ones are those?
No, it turns out there are no safe havens of crypto.
Dude, it kind of stunk because yesterday around the open, equities were down like 1%, and ETH. Some of the cryptos were like looking at a rally yesterday morning, and then equities got pounded, and then crypto got annihilated.
Yeah, and the whole everything goes to, all correlations go to 1.
Yeah.
Maybe an outside chance that this is supposed to be the most uncorrelated.
Which one?
Bitcoin.
I mean, it's hard to make a case.
Yeah,
dude. When
still
actual
risky.
gold is correlated to the market at this point, like it has,
that's been a really interesting one too.
It's been correlated to equities, I would say, really since the pandemic. Gold has, whereas pre-pandemic, that trade was, unless I'm remembering incorrectly, it was more of a flight to quality type trade. But when gold is selling off with the stock market.
Digital
I don't know.
Gold.
It would be pretty funny to see the story of Bitcoin's actually up 10%.
Man,
Bitcoin and VIX.
that day though, when that day comes,
we'll see. Again, these correlations do change over the long term. But right now, in the short term, everything is pretty highly correlated in this crash. Let's get into the platform and take a look at what we've seen across the currency space. We're going to do a little piece on flight to quality currencies in a second and draw some correlations between major currencies against the U.S. dollar, but draw their correlations of Aussie, yen, Swiss franc versus the S&P 500 and the volatility index or fear gauge for the S&P. So that'll be pretty interesting. Well, Glenn, Eurodollar is back in a big way, opening up the platform here and seeing some close to 109 prints. We've already gotten up there, hit 109.20 early this morning, have backed off under 109, but holy smokes. And this is, you want to talk about correlations and different asset classes. This is one of the scenarios where you can't really make a case for equities are down on the week at this point, 3%, 2, 3, 4%, depending on where you're looking. And euro, you might say, oh, given the recent environment, I would maybe say that euro is more risk on than the US dollar. And so I would expect that the euro dollar trade would have been lower significantly this week so far. Yesterday, kind of hovering around unchanged, trading both sides only for like 20, 30 points. And now today, yeah, you're seeing an 80-point rally being sold into a little bit. But yeah, no real correlation with equities across some of these major currencies right now.
Yeah, and what's really interesting, we get caught up in U.S. equities, feels like the whole world is collapsing. But when we're looking at a market like this with that mindset of which is risk on, which is risk off, it's easy to validate that opinion, back up, zoom out a little bit. And if we could pull up euro yen,
sure,
that will give you a little more context, taking out the dollar piece here, and kind of validating the narrative that, okay, this is more of a euro story, capitalizing on a traditional flight to quality currency like yen, and that maybe the U.S. fear, all of the turmoil really is not as global as a lot of these global recession risks are, or risk off sentiment of uncertainty.
It's an interesting thing for sure, because you could also, and you'll see us make the case in just a second, you could also make the case that currencies, in the grand scheme of things, you have equities and treasuries that can be highly correlated in an inverse manner, obviously, where equities sell off, there's a flight to quality in treasuries. Right. Equities are moving higher, treasuries move lower, and we've been in an equities moving higher and interest rates being relatively high or treasury prices being low the last couple of years. It is kind of a middleman in this story, as we'll get to, where we have seen U.S. equities move lower in the last week or two, U.S. treasuries moving higher, U.S. interest rates moving lower, and dollar moving lower against yen and Swiss franc and a couple of currencies. Great call by you to take the U.S. dollar piece out of it, because you would say, okay, well, if this euro is, trading in this risk-on manner where it should be getting hit with the U.S. equity story, if you take the dollar piece out of it, you would say, oh, well, then euro must be down relative to the flight to quality yen. And it is not at all. As you can see here, this is the 15-minute chart. Over the last handful of days, you have a general trend higher. And as of today, it looks like it wants to trade through those recent highs. We go to the daily chart. Not seeing much downside whatsoever in this euro relative to the flight to quality yen piece. So, and we talked about it a little bit yesterday. Keep in mind that a lot of these different global economies, like the euro area, like the UK sparingly, but especially like Canada and Australia, some of the different, like I say, global economies, not the US, have seen risk-off sentiment earlier this year and actually into last year.
Right.
And so it could be a little, because you look at an interesting one here, this Australian dollar, which is probably, and we'll look at the correlations in a second, the most correlated to an equity story in general. And I mean, China sold off hard yesterday as well.
Yeah.
And this Australian dollar is not rallying like the euro is, but you would expect that it's moving through the lows. But to your point, a little bit of a U.S.-centric story that we're seeing here this week, and thus the move lower in dollar relative to yen, a very different chart. We're seeing the bounce in the last several hours with equities in the U.S., but very different than this euro-yen chart. If I go back here and pull up the 15-minute just to take a look. Yeah, as you can see, going back and forth, both are seeing the rally the last couple of hours, but the dollar-yen piece rallying off recent lows. Euro-yen rallying from recent mid-range to highs. Any other interesting pieces to you here on the board? I mean, yeah, euro dollar up another 60 points, pound up close to 130 now.
That is interesting that it's kind of taken, the pound's risen in tandem with the euro. We've seen in recent months and years, sometimes that's not the case. Euro can fly all by itself. Pound, UK, economic picture not been as pretty as of late. But with the united Europe story we've got going, and a lot of those, the action in bond prices there, taking the pound with it.
Yeah, this has been one of the pieces that hasn't sold off as hard as the euro and the yen amid the worst points in those currencies. But I would agree with you. It's kind of surprising how much strength we're seeing in this pound, given that it didn't give up that much ground in the later part of last year. This move was violent from 134 down to 124.
Seriously.
But just for reference, excuse me, going to this euro, this move from 112 down to 102 was a huge move. You might say, well, it's the same amount of points, Frank. Bigger percentage move, and 102 in the euro, given the last couple of years, is a lot different than 122 in this pound.
Exactly. It'll be interesting where the dust settles on this pound piece as well, because you look at where it's actually spent a lot of time in this area. It clustered around 130 on the way down briefly last year. But before that, in 2024, moving pretty cleanly through to the high or to the low, bouncing off of that 130 level, and it looks like last July. And so not really sure what the future is for this pound dollar, but we have historic precedent to the upside and, of course, to the downside.
Yeah, those are definitely the pieces that are moving. Like I say, again, interesting yesterday, did not really see... I mean, we saw some rallying early in the day by the commodity currencies, Aussie and Kiwi, and then they gave all of that back. But not huge moves one way or the other.
The yen, yeah, I thought would actually blow open.
And so a little bit of relatively inside action for huge moves in equities, but today definitely starting to see some movement, and we'll see if this dollar regains some of the lost ground, not only against yen but this Swiss franc. Obviously, we saw some selling in dollar the last couple of days as the daily chart relative to the flight to quality Swiss franc here. A little bit of a rally. We'll see if it continues with equities. Other than that, Canada trying to fight back a little bit here yesterday. This was one of the only pieces that dollar was really moving higher against yesterday, back above 144. Now trading back down close to 144. And I mean, man, this has been like a magnet for this market, this USD CAD market. going back to December, I mean, we've seen huge moves around 144, but holy smokes, we just keep coming back to it. Kind of like if we go to the daily chart on dollar yen, and you remember going back here, I mean, huge moves one way or the other in this dollar yen. But man, how many times we've traded that 150 to 155?
Right.
Starting to wonder if we're going to continue to get the volatility in this market, but it's really just going to keep coming back to that 142, 143, 144 range. If you've been on either side of it, it's been a good trade so far.
Yeah, it's still historically very high.
Yeah.
We talked about the run up at the end of last year in this market. Where will the dust settle? Yeah, right now it's looking at 144, but even during those times of Canadian dollar strength, not getting past 142. So
last piece really quick, not so much on the economic calendar today. You've got jolts, but tomorrow we'll jump into all of the news before it comes out. You've got all the U.S. inflation, and then you have a Bank of Canada interest rate decision. And maybe this is why Canada has been kind of held at bay the last several days, even amid what is perceived as negative sentiment or bearish sentiment for the U.S. dollar in a couple of different ways, is the idea that they're expected to cut again, and the Canadian economy is still. Canada isn't picking up the way the Euro area or the UK have the last couple of weeks. So we'll see about that tomorrow, but let's get into our segment for today. 10 safe haven Forex pairs for a stock market crash. I wanted to go look at the actual correlations, dig into the numbers, and make a case for what is actually safe haven right now, the last several months of trading in the Forex world, and what maybe doesn't have as much of a correlation, because these things change all the time, Glenn. And if you're reading an economics book from the 90s or the aughts or what have you, very different world that we have now. Even, we talked about it a little bit, even gold kind of trading with equities, not the same safe haven asset that we've seen in the past.
Right, and safe haven here just meaning tends to pick up increase in demand when investors are looking for more risk-off moves.
Mm-hmm.
A lot of those risk-on plays not panning out, kind of a flight to quality here, and we see a lot of that action take place in the currency space.
Yeah, keep that in mind, because of course this isn't a scenario of, oh, well, if I have $1,000 in stocks when I am feeling, risk averse, when I feel like there's more risk in the market, I can just buy a safe haven asset and it is safe. We're talking about assets that when stocks move lower, they tend to move higher, and we're going to look at all the numbers. But if equities bounce back, those safe haven assets would probably tend to move lower. And a classic case that the correlation has actually held up recently is treasury markets.
Right.
And so if you want to look at that, you can look at 10-year or 30-year bond prices relative to the stock market. But we're looking at currencies, U.S. dollar correlation versus the S&P 500 over the last decade. Glenn, you see a mixed bag here, which in some ways is good for the Forex trader out there, that this is one of the most diversified asset classes relative to equities. Tends to have a weak relationship on the whole, Glenn. But I was actually surprised going back to the pandemic, where actually right there around 2020, you saw some of the most positive correlations between equities and the U.S. dollar, which is to say at that time, stocks sold off, U.S. dollar sold off,
right,
and then they both kind of bounced back. But in the last 2 to 3 years here, Glenn, you're actually seeing pretty consistently negative or red correlations between the two, meaning that we've seen equities move higher, U.S. dollar move lower, and vice versa. And so this U.S. dollar has been a little bit of the safe haven currency, or the safe haven part of the Forex equation, the last couple of years.
Right, yeah, I am pretty interested in the consistency over the past year. I mean, you look all the way to the right of the graph, it looked like for a second that correlation would flip positive, because just anecdotally, you try and think back the past 6 months, and you think, okay, stocks all-time highs, U.S. dollar tremendous bull run, similar to what we saw in 2022, 2023, and that at that time correlation a lot more negative. But yeah, still holding in strong.
Yeah, and we'll take a look now because the U.S. dollar is only part of the equation here, right? Here we're looking at the U.S. dollar basket relative to the S&P, but now we'll dig into, okay, U.S. dollar and what currencies pose the greatest correlation that we've seen, and are there some currencies that the U.S. dollar is actually positively correlated, or isn't the safe haven currency relative to the stock market? Here you have the top 10 of major currencies and their correlations to the S&P 500. So you'll note that, Glenn, they're all, except for a couple that we'll get to in a second, negative, which is, again, to say that the U.S. dollar part of this is the part that is the safe haven. So if Australian dollar is negative 0.29 correlation to VIX, the U.S. dollar versus the Australian dollar is positively correlated to VIX or inversely correlated to the S&P 500. As an example, if you were looking at the U.S. dollar as a safe haven play in a risk-off equity environment, you would be selling that Australian dollar, buying U.S. dollar in this scenario. 12-month correlation data for currencies versus the U.S. dollar relative to the VIX or fear index show positive correlations for U.S. dollar to VIX. So again, if you flip to these correlations, that would be the U.S. dollar to the VIX piece. And so positive across the board. And if you're positively correlated to the VIX, that means that you're in that kind of safe haven pool, or at least you tend to rise when equities fall, or you rise when fear rises. And the strongest correlation here is that Aussie piece, followed by peso, Kiwi, and Canada not far behind. Not super surprising, right?
Right. And great visual here just to really hammer home the point that all these currencies exist on kind of a spectrum or a range, and where does U.S. dollar land in terms of risk sentiment. But what calls out to me is that none of these are particularly all that strong.
Yeah.
Negative 0.29 on a scale from +1 to -1. Not the strongest correlation we've seen across asset classes when talking about currency correlations, but definitely the standout here. And then all the way to the other side, when we talk about what are these flight to quality currencies, yen and Swiss franc always come up. And here, what do we make of this? Does this just say that on any given day, investors could choose the dollar over the yen, or are these completely uncorrelated?
I love your idea of bringing up as a spectrum, because if you use in this visual the U.S. dollar as the equalizer across all of these currencies, in my mind it's always like, well, in Forex it's a game of relativity. There's always two sides to the pair that you're trading, and so with that idea of relativity, which side of the pair is more risk on? And so here, given historical data, if the equity market was moving lower, you would expect Australian dollar to be moving lower relative to U.S. dollar. Right. Same thing with peso relative to U.S. dollar is more risk on, and thus would move with the equity market most of the time. Again, these aren't the strongest correlations, but you get to the point where yen and Swiss franc on this spectrum, actually they're more risk off than the U.S. dollar in a lot of these scenarios, and so they might tend to rise. And so we broke out the yen to VIX correlation over the last decade as well. And yeah, interesting, you're getting that kind of around zero, slightly positive number right now, because the last several months have actually been red and green at certain points. But you go back to pre-pandemic, Glenn, and yeah, this yen is correlated to the VIX month after month after month for years. So historically, the yen has been a safe haven currency. The last couple of days, we have seen that correlation kind of kick back in. And if you look the farthest point to the right, the correlation is getting greener recently. I don't know if it's going to continue that way, but the yen has been getting back to that flight to quality, that safe haven asset relative to U.S. dollar recently, We'll see if that demand does increase, if fear and uncertainty, if the downside in equities continues. But as a last piece here, Glenn, I wanted to bring this up, that at the end of the day, interest rates are kind of the middleman for Forex and for equities, in that, equities are moving lower, bond prices are tending to move higher, and interest rates are moving lower. If interest rates are moving lower in the U.S., then that U.S. dollar is likely moving lower again. And here you have the correlation between the yen and the 10-year note, much greener.
Yeah, that's a great point, because when you brought up the VIX correlation, yes, more green than red, typically positively correlated. But this just calls out to me that, yeah, when we speak about currencies, you can never pin it on one thing. There are always other factors surrounding maybe a Japan-only story that doesn't have anything to do with U.S. equities. So when we say safe haven, definitely not protected against losses just going to a foreign currency.
Sure.
But then you flip to the U.S. rate play, and this much more positively correlated when we have the yen against the dollar specifically.
Well, so yeah, we'll see if this yen plays out as the safe haven asset, if the stock market crash continues in the U.S. But that'll do it for today's episode. Coming up next, Tom, Tony, and Vanetta. Stay tuned, everybody. Thanks for watching. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Zach, South Carolina.